Hey everyone, Tom Gentile. Welcome to Tom's Trading Room. It is Friday, February 19th, 2016. A very quick outlook I want to give you. First of all, let's take a look at the S&P. SPY last week, we talked about a possible double bottom. It looks more and more like that's going to happen. I would feel real comfortable if we got above and closed above 195. I'm hoping that happens next week. The one thing I really like is as the market is moving higher, volatility is moving lower, and we have made a double bottom on volatility over the past month. This is actually a very good thing for the stock market. Also, let's take a look at a couple other things. So look at TLT, bond market. And so we look at bonds and we try to determine if bonds are going down as the stock market's going up. We last week had this unbelievable rush into bonds. It was coming from everywhere. It was coming from not only here in the States, but foreign investors were jumping in buying U.S. Treasury bonds last week. And we had this almost kind of explosion move to the upside. Well, bonds has come back down, and so has the volatility with bonds, and that's a good thing as well. So one of the most important things that I'm looking at is overseas with the euro dollar. So let's take a look at the euro dollar, and I look at FXE when I look at the euro. And what we've noticed is that we've seen the euro come back down this week as the markets have rebounded, but we are sitting on an area which was resistance. Could that possibly be now support, that 108 area? Time will tell, but again, volatility has also dropped in the euro too. Finally, USO, not a lot to report on oil, other than the fact that volatility has come way down off of its highs as oil is trying to come off of the bottom. But really for the year, we're sitting in a pretty tight trading range in USO of about between 8 and 10. All right, I'm expecting this range will break to the upside as we are becoming seasonally bullish for crude oil and energy stocks. All right. Finally, and we typically show this to our members only, but I wanted to put this out there for everybody. I have noticed with the money calendar, all right, the money calendar, what we do is we chart 250 stocks and ETFs. We look for patterns using at least 10 years of back-tested data. That we look for patterns that actually have 90% or accuracy better, both bullish and bearish. What I'm spotting as we come into the end of February is that not only the mid-cap S&P is bullish, but we also get bullish signals on SPY, the S&P 500, and the Dow Jones Industrial Average. So we are getting in the month between end of February to April strong buy signals. And you can see here over the last 10 years, buying the S&P, the mid-cap, between February 23rd and April 1st has worked all but once in the last 10 years. This next 30 days typically is bullish. All right, I want to make sure that all of you know that. All right, so keep that in mind as you're putting together your strategies, no matter whether they are technical or fundamental. Finally, you can check out all of our information, all of our charts. Everything we've used is right here at tomsoptiontools.com. And if you haven't tried it out yet, check out the 7-day free trial. This is a full trial of any package that you like, all right? If you're into options, you can pick options. If you're into contrarian studies like Elliott Wave, we have something out there called Darknet. Very, very cool software. If you like the money calendar and you like seasonal patterns, the money calendar is available for free trial too. And we even have a professional package as well. You can catch all of that, tomsoptiontools.com. I have a very important announcement I will be emailing you about on Monday regarding signing up for our next Trading Essentials series, which begins in March. So be on the lookout for that email. It'll be coming to you first thing Monday morning. Have a great weekend, and I'll be at the New York Expo this week. If any of you happen to be there, come and find me. See you soon.